Steve Peterson here of Infinity Investments, and welcome to our channel where we talk all things commercial and investment properties. And in today's video, we're going to be talking about 3 strategies of getting your property sold, your commercial and investment properties sold in 2024. Now, if you're active in the market, you know, it's a tough time out here, especially in the Bay Area. I'm in Oakland, California, the epicenter for all bad right now, right? Now, it's my home. I love it. I actually think it's a great place to invest if you can cut through all the crap, right? But selling properties today, not an easy thing, all right? But I got 3 strategies for you. I hope they help you out. If you are a seller, if you're a listing agent, if you're somebody just trying to move property, right? Because I think that the whole marketplace is under the assumption that we're going to have cheaper interest rates, maybe this summer, maybe later on in the year. But you know what? They ain't here yet. And if you're in a situation, not even a bad situation, you want to sell property, you want to get it sold now. I have a few clients, they want to buy properties. They see the opportunities. They want to leverage the equity that they have in buildings now, exchange up and take advantage of these great buying opportunities here in the Bay Area, right? You want to buy the dip in the Bay when everybody is not fighting over properties and you don't have to outbid 40 people to get the deal, right? So it's a good time to buy it. But, okay, you need the equity from your property to make it happen. How are you going to make it happen? Well, here's 3 things. Number 1. How about creative financing? All right. In the 70s. So right now we're in high inflation, high interest rates, right? Really haven't had that kind of an environment since the 70s, right? So we look into the 70s. What did they do to get deals done? Well, creative financing, all right? Where the seller carried some paper or allowed their mortgage to be taken over subject to, or they can create a wraparound mortgage, or they did a contract for deed or a land contract, master lease option. These are different strategies in which you, the seller, can create, a note or create financing for the deal. Financing that will be attractive enough to the investor to where they can make money. Because let me just tell you, some of these properties ain't selling because the person buying them buys them, they ain't gonna make money. And nobody's buying property in 2024, to lose money or to have a write-off, right? That ain't happening, y'all. People need to make a profit. They need to be able to see the growth. They need to be able to see themselves getting it. So if the biggest issue we're having is capital, the cost of capital. So if you, the seller, can create that, lower cost of capital by taking your equity and carrying it, you can get a deal done. And by the way, that don't mean necessarily that you're carrying all of your money. So there's several situations in which you creative financing comes into play to where you can get a good chunk of your money so that you can take that money, reinvest it in the market today and make a better rate of return. Such as, just give me an example. Somebody has a mortgage, low interest rate mortgage, right? There's a couple properties I'm selling right now that have these, where if you come in, the buyer comes in, put their money down, now they can take over that mortgage subject to the existing terms. There's a little bit of risk involved in that. I have other videos, maybe there's somewhere around here on this video that explains in detail how to do a subject to deal, where a little bit of risk involved, but at the end of the day, the buyer takes over that loan and maybe it's at 3-something%, maybe it's at 4-something%. Now there's an incentive for them to buy that property because they have an interest rate they can't get on the street, and that allows them to make money in the deal. And if a seller were to do that, there's a little bit of risk in it for the seller, but they can get a big chunk of their cash, if not all of their equity, take that equity, reinvest it. Just an idea, all right? A lot of people did it in the 70s and it worked out. There's some pitfalls. I got some other videos on how to do creative financing, but that's probably the number 1 way we get deals done. All right. Number 2, you can buy as a seller, you can buy down the interest rate of prospective buyer. All right. Form of cash at close. You can buy that down to get their rate down. Now, how much you have to pay to buy it down, how much the interest rate is going to go down. That's going to vary on every single lender. But let me just tell you, this strategy has helped people close deals, right? A lot of people in residential are doing it. It's helping them get the ball over the goal line, right? But it's also something that potentially can be done in commercial real estate. It's a matter of cost up front, right? But every little penny counts, especially for the investor who is counting every penny because they want to make money. Again, a lot of people are not buying properties. Even owner users are looking at property and saying, hey, this has to be financially advantaged for me. There's no more dumb money in the market where people just overpaying because they love real estate and it always goes up, right? That ain't happening right now. So if you're able to buy down the interest rate, if you're able to credit some closing costs, if you're able to get creative in that respect, you can help motivate a buyer to come and buy your property, all right? And the third thing is old school, but you know what? And a lot of sellers, y'all don't want to hear this, but look, it's the truth. Price the property in line with the current interest rates. And here's what I mean by that, all right? Whether it's an investment or owner-user property, somebody has a rate 9 times out of 10, let's say pay cash, that they're going to pay for their financing. So your cap rate, your capitalization rate, especially if investment property, it has to be priced where the buyer can purchase the property and get what's called positive leverage. Positive leverage is where the rate of return is increased by the use of the mortgage, meaning that the overall rate of return of that property is higher than the cost of the mortgage, so that the investor makes a spread, makes a delta, all right, on the bank's money. So if the interest, give me an example, if the interest rate is 6%, let's just say interest rate is 6% interest only, and the capitalization rate of the property is 5%. Now, even if it's a positive cash flow at the end of the day, because of the down payment, right, 30-40% down, it's a negative leverage because the return on the building is less than the cost of the money. So in that example, the cost of the money actually eats away at the return, right? You're gonna get less than 5% on the money you put up. Let's say same building, all right? That building is generating a 5% return, but let's say it's a 4% interest only loan. Now, it's positive leverage. Now the investor is making a spread, making a delta on the bank's money. And by the way, when you take risk and you sign for a mortgage, all things being considered, we generally like to make money on the bank's money. Just saying, all right? So that means you have to price your property in line with that. A lot of people are pricing their properties back in 2021, time and numbers. It don't work, y'all, all right? And I see people with equity that if they came down to where the buyer can make some money, they can get a property sold, maybe less than they want. But if they take that equity now they can go buy and invest somewhere else and make a better return, right? So every property, every seller, every situation is a little bit different. So you might want to book an appointment with someone from our office so we can analyze your portfolio. We can analyze if a sale makes sense for you and if you can make higher returns if you buy something else. But these 3 ideas, creative financing, buying down the interest rate, crediting for closing costs, right? And pricing the property the right way in line with the cost of the debt is how you get property sold in 2024. I hope this was helpful. If it is, like, subscribe, share. And to the next video, peace.